Good morning, ladies and gentlemen. Thank you for joining us today for Huawei and Fintech News Malaysia's jointly organized digital banking symposium. And special thanks to the panelists for taking the time to share their thoughts with us today. There's never been a more difficult time to be the CEO of a bank, where in the past banks have only had to compete with each other. Today we're seeing one of the most disruptive decades for BFSI we've seen so far. Banks today have to contend with a rapidly shifting consumer behavior, an onslaught of new players, all eyeing for a piece of their pie, from big techs to heavily funded fintechs, and even the new digital banks as well. And not to mention, there is a potential identity crisis that could be brought on by the introduction of central bank backed digital currencies and also even digital assets reinventing the way we view and invest money as well. And on top of all that, we all have to contend with a global pandemic that's currently ravaging the world right now. So that's a lot to deal with and a lot to kind of navigate against the backdrop of these uncharted territories. I'm pleased to be joined by a panel of industry C-levels to discuss how the industry can navigate this era of uncertainty. I'm glad to be joined by, on the top right there, Domenic Fuda, who is the Managing Director and Chief Executive Officer of Hong Leong Bank. Below him, we have Muazzam Mohamed, who is the Chief Executive Officer of Bank Islam Malaysia Berhad. Below Muazzam, we have Ignatius Ong, who is the Chief Executive Officer of TNG Digital. And below Ignatius, we have Anson Shen, who is the Chief Strategy Officer for Huawei Cloud Asia Pacific. Gentlemen, welcome to the show. Thank you for joining us. Glad to have you all here. So maybe we can start by asking a big question. With all these things that's happening right now in the world, what are some of the biggest trends and what are some of the biggest threats that you see to your bank and you know what's keeping you up at night? Maybe we can start with Domenic. Domenic, what are your views on that?
Good morning, all, and thanks, Vincent. You're right. It's an interesting time to be in banking, not just a CEO, but to be in banking generally. Some of the trends, obviously, the pandemic has really brought on, the digital lifestyle. It was a trend that was there that last a number of years, but the pandemic has certainly accelerated move to digital everything. So it's not just banking, but literally, right? We're doing a bunch of stuff online, which otherwise in the past we might have chosen to do maybe a hybrid, right? Some physical, some online. As we move online, or everything moves online, and there move, there are a couple of other big trends, right? With it, one is cybersecurity. As more and more things are done online by wider audience, working from home, for example, right? It involves a fair amount of more digital capabilities, interactions between employees, the bank clients, and so on, business partners, vendors. And with that kind of, connectivity, it does bring a different level of cybersecurity risks. All of us have been quite busy, right, in ensuring whilst we facilitate digital everything, we do it in a safe environment. The other is the destructive behavior from, like you said, whether it's cryptocurrency or different forms of financial assets and so on. We need to ensure that we remain, right, banks remain relevant, but without necessarily jumping onto the bandwagon. Because some of these things, the phases that we go through, and at the end of it all, there isn't much by way of really business outcomes and/or real traction, aside from a trend that goes by rather quickly. So that's important as well. Over the last 18 months, the BCP type of operations have been extremely important. Whether because of the pandemic, can work together, right? The physical aspect of coming together has really been challenged in the last 12, 18 months. So are we ready to work not just digital, but also in physical aspects, right? From different locations, different capabilities and whatever. There has also been a trend, obviously, in that. And our ability to be able to do so has been quite important. In banking specifically, right, our customers have been able to do just about it online, really. We process loans, we did loan acceptance, digital signatures, account opening online, eKYC, you name it, really. There's been capabilities, which some of them were there already, but we had to accelerate a number of that to be able to operate effectively and efficiently over the last year and a half. So these trends are there and will continue, in my view.
Thank you, Domenic. Very quickly before we move on to Muazzam, so what are the biggest threats that you see to the banking sector right now?
You know, you mentioned, right, whether it's big tech, fintech, telecom companies and so on, right? Everybody wants a slice of the pie. Payments is certainly a big hot area where the nature of payments facilitates, I guess, the number of entrants. The other one is around small consumer loans, consumer lending. It's also been an area where there is an awful lot of competition. Wallets, that type of stuff, right? And then providing small merchant type of loans, right? Online marketplaces, you sell your goods there. The people are getting quite good at analyzing the data. Based on that data, then they provide some sort of a small trade type of financing to SMEs. That's been very hot, right? So we need to compete and compete quite effectively. I think banks, we've done a fair bit of stuff. We lend similarly, right? Using data, unlike the traditional way of underwriting, right? We also use data that we see in the online space through our own checking accounts and so on. Use that kind of data to underwrite small SME, MME, micro SMEs type of loans as well. And their ability to provide online decisions or quick decisions and then disbursements, where in the past it might take, right, to document a loan, it takes a day or so, right, and then you disperse from there. That kind of competition is there and it won't go away. Actually, the pandemic has brought it on and it will never go away now, right? So it's a new norm and we just have to remain sharp, right?
For sure. I'm sure Ignatius can attest to the payments portion of what you're talking about. Let's jump on to Muazzam. Muazzam, what are some of the biggest trends you're seeing? What's keeping you up at night? What are the biggest threats you see to Bank Islam right now? Muazzam, you have the floor.
Yeah, okay, thank you. I think I agree with the points that Domenic mentioned. It's quite universal. I mean, in terms of affecting the banks, right? It's conventional or Islamic, but probably to me, the biggest threat currently is actually the state of the pandemic, and we don't know really when we are going to be opening up. Like where we were last year, we thought that 2020 was the reset year, 2021 was recovery year, but who knows that MCO3 come in, and impact of the MCO3 is a lot more prolonged compared to what was before. So when is it going to end? And the fact that when we put some hypothesis to say that okay, probably with the vaccination and there's going to be opening and all that, then we start to see the impact of Delta, and now people are talking about Lambda and all that. I mean, when is it going to end? Because that affects really the state of the economy. I think from the perspective of the technology and all that, I think Domenic has spoken in detail, but probably I'll take it in a slightly different perspective, different dimension, right? From the perspective of the customers itself, I think firstly is that, with all this need for technology adoption, with competition, with the threat coming from the fintechs and all that, even banks are rolling out all these various digital channels to enable customers to use and all that. But at the same time, we still see, in terms of the readiness, the concern that we have would be readiness on the customer's perspective as well. I mean, not all our customers are digital savvy, aware about good cybersecurity practices and all that, because we keep seeing fraud cases, due to customers sharing passwords for their debit cards, passwords for the internet banking and all that, TAC, being compromised and all that. So I think that the literacy education at the customer's perspective needs to be also accelerated and probably brought to mainstream, so that they are at par in terms of you give this kind of convenience for them, but they also have that capability to use this convenience in a safe and secure manner. That's one thing. Secondly is that I see the disruption more so felt by banks, like many of us, especially local banks. We focus on retail and all that. But coming from the pandemic, it shift the demography, it shift the characteristics in a way. I mean, even before the pandemic, we see almost a quarter of Malaysians, on how should I say, on the gig economy sector. With the pandemic, there's going to be a lot more. So in the past, our model have always been, when you talk about retail, right? When you want to access credit, you always look at permanent employment, stable income, and all that. But when you talk about now, post-pandemic, our hypothesis is that a lot more people are going to be on gig economy. How do we now onboard and assess, and how would that change the whole landscape dynamics in terms of how banks respond? So obviously, I mean, with the technology and all the enablers, there's also a shift that we are seeing in terms of the demography and the risks, so to speak, in terms of characteristics going forward. So this would be, I would say, things which is in addition to what Domenic would have mentioned already.
Some very important points over there, right? I mean, of course, nothing is going to impact the business more than the pandemic right now. That's one of the biggest thing. And, talking about gig economy, surely not just during the pandemic, after the pandemic, people might enjoy the flexibility, and banks need to rethink about how they assess this credit risk, as you mentioned, and fraud as well. A lot of very key points that maybe we could also jump into a bit later. So let's move on to Ignatius right now. And Ignatius, coming from the threat side of things.
No, I'm not.
Why don't you give us a sense of where you see the finance sector heading from the perspective of an e-wallet player who's doing a lot of embedded finance right now?
Okay. I think as an e-money issuer, e-wallet player in Malaysia itself, I think in terms of being age-wise, we're relatively new. We are just into 3 years old. But I think in terms of the advent of e-wallet across the board, especially this part of the world, China and in Asia Pacific, is not something new. I think the focus, the challenge that we have today is, of course, to change the mindset of our users, Malaysians especially, with regards to using e-wallet as a form of payment. I think that's the first and foremost foundation of what an e-wallet does. And again, being not wanting to sound like a villain, I have to give a bit of credit to this pandemic as well, because the pandemic has actually pushed a lot of users, merchants alike, to start adopting and embracing what an e-wallet does. And again, like I said, the last 2 years we accelerated quite a significant bit, and also to the fact that Bank Negara and Ministry of Finance has actually put in a couple of initiatives which we participated quite strongly. One of it was, of course, early last year was the e-Tunai, and then follow up with the e-Penjana. And I think the recent one that just concluded was e-Belia. The fact remains that my biggest competition is still cash. It's banknote, right? Everyone is still fixated on the fact that banknote is something I can touch and feel, and it's real. But whereas on an e-wallet basis, I assume that the banks will also probably agree with me that getting them to go into your online app to transact, especially for the baby boomers, is going to be a bit of a challenge. And we do see that similarity over in the e-wallet space. But I think for the last 18 months, we realized we also seen quite a fair bit of baby boomers as well as Gen X coming on board and embracing the e-wallet and starting to actually put money into the e-wallet even ahead of time before our transactions made. So again, I think some of the things that we are in the pipeline, we are venturing to financial services, of course. The first two that we have launched this year, one of it is Go Plus. And I think, again, it goes back to the fundamental and foundation of why we exist. And it's essentially to cater to the needs of a typical consumer, a typical Malaysian, a man on the street, right? What are the pain points? So they see the e-wallet as a good form of making payments, especially at SME levels, where predominantly it's actually transacted at cash level. But there are also pain points. People say that, hey, you know what? If I put my money in the bank, I still earn a small interest, whether it be savings account, current account, or fixed deposit. But putting into an e-wallet, it actually does not generate a return for me, even though, any e-wallet, and now you have seen some e-commerce guys coming into the e-money issuer space as well. Of course, then you have that value proposition of cashbacks. You have a value proposition of working together with your merchants, your partners, to give that sweetener to the user. But we hear our consumer well loud and clear, and hence that's where we launched the Go Plus. And what the Go Plus is premised upon is it's a money market fund at the back that actually is reinvested in banks. In this case, we have also reinvested all of the money that we have actually collected from our users in Islamic banking. That makes it a little bit more Sharia compliant, but by end of this month, we will be actually fully Sharia compliant. But what we do want to do is to make sure that the value proposition product that we propose and offer to the market, it's revolutionary. So that Go Plus account that you see is equivalent to like an e-wallet account, which you can use it in any use cases, right? Whether it be payment for toll, dashing into Starbucks or 7-Eleven for your cup of coffee, getting your comfort food like your chicken rice or your wonton noodles at the corner coffee shop at the end of the street. But what it does is that at the end of the day, whatever balance that is still remaining in the wallet, we will multiply that with an interest rate which is very, very close to a fixed deposit rate. And we credit that 1 day interest for your use the next day itself. So hence, I think that's revolutionary. That is something that we want to cater to what our user is requesting. But over and above, we give them more. And hence, I think those are some of the things that we need to start inculcating and educating a typical Malaysian of why digitalization is the way to go moving forward. And that's my thing. But what keeps me at night is actually, I'm just waiting for the day that Bank Negara says, hey, you know what, you're going to withdraw banknotes and it should be digitalized. Could be CBDC, could be cryptocurrency, I don't know. I think, but yeah, definitely well placed and well braced for some event of that nature coming forward.
Sure. CBDC is definitely something interesting we can jump a little bit more into a little bit later. But just to kind of speak to your point of the jump in e-wallet adoption, right? Bank Negara reported last year that we saw 131% increase in terms of the transaction volume and even 164% for merchant registration. I'm sure that number has gone up in 2021 as well. So let's move on to Anson. And Anson, what are your views from a technology provider perspective in terms of the biggest trends in this space?
Yeah, thanks, Winston, for having me. I guess my fellow panelists will be much more qualified to comment on the banking trend. But from our side, as a tech vendor, we see certainly various banking finance customers from various regions, including China, within China and also outside of China in Asia Pacific region. So maybe I can share a bit of observation from my perspective. Right? So as a cloud vendor, I would say what we see is a large accelerating adoption of the cloud infrastructure in the last couple of years, especially after the pandemic hit us. And if you look at our growth rate of Huawei Cloud was growing almost over 150% year on year. So that's very good result for us. I'm not sure if it's don't want to be taking advantage of the pandemic, but that's just an outcome out of that. And I think what's driving that is really the theme, as Domenic mentioned, is the digitalization, right? So what we there's a lot of uncertainties that we see in the world today. But one thing, however, becomes more and more certain is actually the trend of digitalization, right? So and digitalization before pandemic can be something that is nice to have for some company, but now it's more and more becoming the essential element of many companies' survival. Yeah? So there's certainly a lot of big attention being paid to digitalization, and also if you look at the what's happening in China, what the people estimate that previously it might take 30 to 50 years to fully complete the digitalization process, but now after the pandemic it will be rather shortened to between 10 to 20 years, so that all the business will become a digital business. So this is really I would say on a macro level what we what we are seeing as a vendor, right? If you zoom down, zoom down, a little bit on the cloud, there's I think what we see is a lot of adoption on the more advanced technology. So in the a lot of people in the old days when they say digital transformation, but in fact they just leverage, they just apply information technology on their business. But now when we refer to digitalization, we start to see a lot of adoption on, let's say, big data analytics, machine learning, and AI as a service. So these more advanced technology really focusing on the use of data, right? So to transform a traditional business model to a data-driven business model, and with that model, you'll be able to create a much better customer experience, right? So that's kind of the second thing. And the last thing is, out of all the customer that we speak with, if we look at the successful ones, in this market, they take a rather customer-centric approach when they analyze the market rather than from a product angle, right? So when they design their financial products, they first design the customer journey and the customer experience on the digital interface. So a lot of company, they rely on the ecosystem platforms to embed the financial products in it, instead of having the financial product, rather decoupled from the daily life of the customer. So that I think is what we're seeing happening in a lot of the fintech industry. Back to you, Vincent.
Thank you for that, Anson. Okay, so I think you spoke to some of Muazzam's points about using data for various purposes, or like he was mentioning for the credit risk. I'm sure you could be using fraud, you could be using RPA, a lot of different applications, and that's something we are certainly seeing a lot of banks apply right now. Thank you for sharing your views with us, Anson. So for my next question, I'd like to direct it to Domenic and Muazzam. But before we move on, is there anyone else who would like to add anything? No, okay, so I'd like to direct my next question to Domenic and Muazzam, and if anyone else wants to chime in, they're welcome to chime in after this as well. So obviously, one of the biggest things that's happening in Malaysia right now is the digital banking license, right? We have 29 players applying, and quite an interesting range of players. We have 3 state governments, a couple of big techs, telcos, quite a interesting range of players. I want to get your views on this, Domenic. How do you see this potentially impacting incumbent banks like Leong, and what are you doing in response to this? You have the floor, Domenic.
June 30th was the deadline, right, for applications,
Yeah.
and there has been a varied field of applicants. I guess we will know the results in the first quarter next year. Actually, it's not a bad development for the whole industry, I feel, because they'll be governed by the Banking Act, as you know, and actually there'll be a more of a level playing field with the digital licenses governed more or less, right? There are slight differences in regulation in the first 3 years, first 5 years of their existence, but by and large, they'll be governed by the same regulation that we will be governed. So actually, I think it's a good development. With that, whatever they're able to do, the incumbents can do. So then it's a question for us to whether we're ready. We have the capabilities, the infrastructure, the know-how, the skill sets, and so on and so forth, right, to be able to roll out some of the things. Competition is always welcome. The consumer will no doubt be the beneficiary, but for the incumbents, I really don't feel it's a massive threat, because we will be able to compete. We have the resources. We've been investing, as you know, right? The incumbents have been investing in digital capabilities, customer journeys, the whole data science, data analytics, capabilities to gather data. We've been big gatherers of data for a long, long time. We've been using data to make decisions, right? The buzzwords, right? Data science. We used to call it credit scoring, but it's been there for a long, long time, right? So, and our ability in the last couple of years using, Huawei type of technologies, but not only, to mix data, the traditional data the banks might have collected with the unstructured data, social media and whatever, and been able to bring that contextual marketing, making decisions on the go. aligning to life stage or what activities the customers are doing. Our capabilities to do that because of investments we've been making over the last couple of years have improved significantly. You would think that the digital players will come into the marketplace and adapt some of these things, right? Because they're building from scratch, so they're going to use the latest available technologies to do so. But I feel we are ready, and in many ways, last year, just as an example, Bank Negara issued the eKYC guidelines in June. We went live with the eKYC app, the ability to open an account totally online and not need to see anybody. We went live in the first week of October. Within about 3 months of the regulation being published, we were live, right? That kind of, honestly, if the regulation came out 5 years ago, it probably would have taken us 9, 12 months, right, to figure it and try and go live, right? But because of the infrastructure we built over the last number of years, we were able to be quite agile, right? And it was in the middle of pandemic, I should add, right? Working from home, blah, 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 right? The rest of the stuff. And we were able to adapt to that kind of change very rapidly. So yes, more competition, no doubt. Hopefully, pandemic will be over by the time the digital licenses get their license, the digital banks get their license. The economy grows again, and we'll be able to compete on a level playing field. That is my field.
Okay, great. I have a follow-up question, but let's jump to Muazzam to get his views first. Muazzam, what are your views? I understand that in Bank Islam, you guys are setting up a special, separate unit to focus on digital banking, right? So, what are your views on the new players coming in, and how does that unit play into your strategy to defend your market share in this space?
Okay, thank you. I mean, definitely there will be more competition, I think, for the market share. But I guess having this fintech before and now the digital banking applicants coming in, and we knew about this earlier, I look at it positively, because basically what it does is that it forces not just us and banks, but the whole industry to respond a lot more proactively. And we wouldn't have been making this kind of progress in our digital journey today if not due to the threats of these digital banks and fintechs and all that before. I mean, unfortunately, financial services industry is not known to be, naturally innovative and creative in coming up with new solutions and all that, and new business model. So in a way, it's good. It forces us to be a lot more agile and all that. But at the same time, I also echo some of the points that Domenic mentioned. I mean, we have some experience, obviously, because when you talk about digital banking, there are two parts of it. There's the technology side. I mean, there's a lot of discussions that I hear before. These are people talking about this customer journey, technology, and all that. There's another part that is also a business offering financial services, and and there's a lot of regulations around it. I mean, that's part of the reason why banks are set up the way it is to a certain extent. Today is also working around those various regulations as well. And then looking at the digital banking experience coming up from various backgrounds and all that, I think some of them we're aware that they have the unique customer base. Some of them already they have, right? Some of the applicants would be a lot stronger and would have a better proposition than some of the others, because some of them have got an existing customer base that they can monetize from. But what we see is that with the kind of setup, banking at the end of the day requires scale and all that. There's always room, personally, I think, for collaboration with the fintech and also the digital banking applicant, because at the end of the day, some kind of physical infrastructure would probably still be required for digital banks and all that. And the incumbents will have that, naturally would have. And it is, even though there's going to be digital banking applicants, there could be still potential room for collaborations, the way I see it, right? And then the other thing that I just want to add on here is that I want to most likely, I mean, there's obviously the focus and the topic today is about digitalization in terms of the business model and all that technology, and channels. But the other aspect of digital banking that I'm quite excited about, I'm thankful that in Malaysia we take that approach. It's about the financial inclusion, because it's stated there that it needs to serve the underserved. Now in Malaysia, unfortunately, from credit perspective, we're not talking about deposit perspective, but from credit perspective, there's still that gap in terms of serving the underserved. When you talk about, like again, I said the gig employees, those working in the informal sector, the small micro entrepreneurs. The mainstream financial institutions are not serving them, because of various reasons, the reach, the perceived, risk, that kind of thing, and all that. But this is where I see, digital banking coming in and be able to serve that. But at the same time, it's also forcing even the traditional banking institutions like us to also look at, to say that, hey, there is this opportunity over there. It's not that these people are not being served. When we say it's unserved by the mainstream banking institutions, but they are being served by probably some of them even illegal money lenders. For customer perspective, when the licensed institutions now start to go and serve them, because in our world, things about fair treatment of customers and all that are very important to the regulators and all that. That helps to elevate in terms of protection for the customers going forward while being served and all that. So I look at it positively in the manner that there's always opportunities for incumbent like us. And obviously from preparation of it, like you mentioned, we've got our Center of Digital Experience that look at from digital banking proposition perspective in an entirely different manner. We look at from the way of the infrastructure setup, from in terms of the business model, in terms of reach and channels and all that. So yeah, I think we are also ready to come up with our separate digital banking proposition soon.
Thank you, Muazzam. Before I ask my follow-up question to the two bankers in the house, Ignatius and Anson, would you guys like to add anything to the conversation of the digital banking license? No? Yes?
Perhaps I'll just chime in a quick one. I do agree with what Domenic and Muazzam has actually highlighted with regards to digital banking. It does create more competition. It's good for the market. I think in terms of digital banking, which it's like what we know, right? Bank has issued, as they've collected the application, and probably in Q1 they're going to announce the 5 winners, the bidders that's going to be. I think from our perspective as an e-money issuer, we always ask ourselves the question: do we really need a digital banking license to do what we are doing today, and what we have in the pipeline in the longer run? Does the digital banking license actually have certain confines or curbs to it? So I think the good stuff about what we're doing today is that we believe in strategic, smart partnerships, and we work with players in the market who are experts in it. So rather than starting from a green field, from a clean slate and from scratch, we're talking to partners that make sense. Like for example, I hate to go back over and over again with the gold blasting, but we're working with Principal Asset Management Company, which is probably one of the top 5 in the world. We are also in talks with banks. Without spilling too much beans, we're going to be launching something like a micro lending in the next couple of months, and we'll be working with banks itself. So I think in terms of expediting and accelerating our product offer to the market, which I believe the digital bank is going to be going along the same lines, we want to take advantage of this situation to educate the market about digitalization, about what a digital bank is going to look like in the near future, and getting them to experience all these new financial services, things that we're doing, financial inclusion, where now we've gotten the Gold Plus, we're getting the P40s to even try putting a small amount of money into the money market fund. So I think it's all good. I believe the digital bank environment that's going to set in the next 1 to 2 years, it's going to be very exciting. But we would like to take this. Again, not sounding too arrogant, but we wanted to take this opportunity to push the market a lot more faster. That's my take on that.
I mean, in a way, you already have wealth, and with your recent investment from AIA, you guys going to do a bit more insurance lending. So you are already providing a suite of financial services. Okay, cool. Thanks for the input. So before I ask the follow-up questions, Anson, do you have anything to add to this particular conversation?
Yeah, just a couple points. I think what Muazzam mentioned resonate with me well, which is at the end of the day, no matter how digital, there needs to be a physical element of it, which is the infrastructure that underpins all these software stack, right? So I think across the region, what we see is a lot of these digital bank, they have a preference to adopt cloud when they want to build their digital bank, because the cloud gives them software defined infrastructure, right? So it really becomes allow them to be digital native, so that the entire bank is software defined, and it was whenever they need to build stuff or iterate, it's a matter of press some keyboard buttons, right? So that gives them the speed, the agilities to go to market, to compete with a lot more faster pace. However, underneath that, there's a physical element, and this is where we're coming, right? And I think physical element is important, especially, I think people mentioned all about data security. In this cyber world, how do we really protect data? How do we protect data privacy, for example? So that's why it's important to have that physical infrastructure. Like, for example, what we have partnered with Telecom Malaysia in Malaysia is to really build a Malaysian-owned end-to-end cloud infrastructure within the country, so that we can be 100% sure that there's data sovereignty, there's privacy protections, there's local compliance being met, etc. Yeah. So that's all I want to add.
Thank you, Anson. And we certainly are observing a lot of tech providers having a stellar year. Cloud players, digital identity players, they're all recording, record profits for Q1 this year and last year as well. So I think that's definitely something that we're seeing in this space. Now, just to follow up with Domenic and Muazzam on the question of the digital banks and all the other threats, right? So, two questions. One question, Domenic, you mentioned that you don't really see that these digital banks are a threat, but the challenge is that it's not only the digital banks that's coming for your pie, right? You have Ignatius over there eyeing your payments market. You have the digital banks eyeing the SME market. You have a lot of wealth tech players eyeing your wealth market. So, in a way, do you see that banks might kind of suffer what they say, death by 1,000 cuts, right? Is that something that you see happening? And number two, of the 29 contenders, who is one of your favorite picks? You have the floor, Domenic.
You're right. You could define it as a death by 1,000 cuts, because we've been attacked from multiple angles, right? Yeah, so good define it as that. But I mentioned, right, it's presumably they're going to open up market segments which was not the predominant domain of traditional banks. The money lenders, it could have been your money exchanges, it could have been your local pawn shop, right? They used to provide that stuff, right? The digital banks now will reach out through the unbanked or underserved customers. And because, it's not that banks in the past didn't want to serve those customers. The liability side, the deposit side, we probably did, because it's low touch type of products. When it came to the lending, financing side, it might have been a bit more difficult, because the whole underwriting process was actually quite costly. So to reach out, right, in the traditional way to all these segments, that literally, A, it was very difficult to underwrite, and B, it was to do so. Digital brings some of those elements go away. You can reach out just about anybody in Malaysia rather cheaply, right? So from a cost perspective, to acquire and to continue to service, right, the cost comes down significantly. Digital banks would approach it that way, right? So a whole new segment of customers that wasn't traditionally there for us, right, for the traditional banks, will open up. Then the underwriting that we just talked about earlier, right, using data to underwrite, as opposed to forms and paper-based shuffling around, right, to do underwriting. Then it reduces, their ability to make a decision, using more, maybe even using more current data, as opposed to financial statements which might be current, pay slip which might be dated, and so on. You can use the transactions, whatever, right? That type of stuff. You can use much more underwrite and provide the credit. So it does open up segments think, that were not there in the past. Yes, traditional banks will come under threat, right? Some of these things will compete with us. The e-wallet that Ignatius mentioned, there's an awful lot of cash, and cash is very expensive, not just for banks. It's very expensive for the entire economy. So if he replaces the use of cash, actually probably does banks a bit of a favor as well, right? Because the ones that store the cash around, whilst the central bank prints it, traditional banks store it and carry it, right? And that's not cheap. So if you move some of that, right, move the currency onto a digital platform and so on. So, yes, one side of the coin is death but 1,000 cuts. But on the other side of the coin is a bunch of advantages, if you like, or game changers, which will also benefit the incumbents. I don't want to sound blasé about it. Competition is competition. And it's always a threat, right? And if you don't stay current, if you don't stay on your toes, if we don't continue to innovate, provide excellent customer service, and traditional banks also we can mix and match the digital stuff we can do and do more, and we will learn, right, from e-wallets. We will learn from the digital banks and so on, and do a bunch of stuff. But we bring a bunch of expertise, right? Whether it's the physical, whether it's the RMs, whether it's the ability, we can underwrite the $500,000 loan. We can also underwrite a $500 million loan. The pure spectrum, right, of capabilities that we can bring to the table. Connectivity into regional markets and global markets and so on. So, it's a mixing of those as well, which will continue to provide us with some competitive advantage. And we just have to play up, right? Obviously, right? Play up on the advantages that digital brings, connectivity and so on, data science, AI, RPA, and so on and so forth. Bring those, but don't forget about the human touch, right? That element of relationship building, which, by the way, is very important in wealth management. Not so much what Ignatius was saying, that $500, the 2,000 ringgit, maybe 10,000, 20,000. But if you really invest millions of ringgit or whatever, that relationship, right, with an RM, the walking together, right, the journey together between the bank and the client and whatever, will remain, I feel, quite important, right, at least for the foreseeable future. And we as banks, that competitive advantage, I think, is there. So merging the two, right, the digital and some of the traditional strength we had, I think will be relevant going forward. So yes, we will bleed a little, to use your analogy, right? Yeah, some of the cuts will bleed a bit, but I'm sure we will have band-aids ready to stop some bleeding and be able to compete.
Okay, thank you for that. I'm sure your team is looking into patching that as and when you guys go along. So the second part of the question, any favorite picks in terms of the 29 applicants that you see, Domenic?
I won't mention any names. It's very varied, right? It's a very varied field, right? That's for sure, right? And there is some
just trying my luck.
Partnership, good coming together. Yes.
Right, excellent. Thanks, Domenic. Let's move on to Muazzam. So 2 dimensions to the question, right? The death by 1,000 cuts, and if you have any favorite picks in terms of the 29 applicants, you have the floor, Muazzam.
Yeah, I think obviously out of the 29, we have a few that we are keeping a closer eye on, and some of the others that we say that, okay, probably they might be there, they might be not, and all that. And obviously, Ignatius is here. One of the few that we are watching closely would be TNG Digital, obviously. But I think on the other part of the question, I echo again what Domenic mentioned. But what the key thing that I want to highlight here is that why I started off saying that this advent of fintech and all that, I look at it from the positive perspective, because it forces us to look at new market segments as well. Because we're looking at this fintech is looking at this, what is the kind of business proposition and all that, and we expand in terms of our in the spectrum of the kind of customer that we look at, and true enough, obviously assisted by the latest available technology, the availability of more data, more current data and all that, we are able to go into new segments that before this we were hindered from going in because of some other limitations. So that's one thing. I think secondly is that from the perspective of co-working collaboration. We've been engaging. We've got a team that's solely looking at forging collaborations with fintechs even before this, right? And we are able to offer more services because some of them, they're very novel in terms of the capabilities that they bring in and all that, and complement with, for example, certain market access that we already have and all that. I mean, we can come up with a new proposition going together. So we always look at it as, how, I agree with that there'll be competition, there'll be some cuts here and there for us, but let's looking at how can this new players that's coming in and all that can work together with us to further expand our market and all that we were not serving even before. And that's the focus of our digital innovation team, and to a certain extent the premise that we do for our CDX. I always like to give this analogy that I share, like a Formula One team. If you watch, right, you've got the Mercedes Works team, but you also have the you have the Aston Martin and all that that's using the engines as well, and they can compete. And if you look at Red Bull, who's almost beating Mercedes this year, they're not the Works team. They're using engine by another Works team, but they're doing better than the Works team, basically. And so this is a good example of how collaboration can be beneficial.
That's an interesting analogy. It really puts it into perspective. So you're not gonna talk about your favorite pick, or?
One of the favorite pick will be TNG Digital because Ignatius is here.
Okay.
We didn't apply.
Just as a fintech player, I guess.
Yeah.
Okay, very cool. So before I move on, anyone else want to add to this conversation? No, okay. So I think one of the other big things that's happening in the world of finance and banking is the rise of central bank-backed digital currencies, right? And just last month, we had a chat with Suhaimi from Bank Negara. He's also sharing with us that Bank Negara is looking at a wholesale CDBC kind of pilot for Malaysia. While there is no solid plan to look at a retail CBDC that could potentially replace the M1 money supply, we are seeing a lot of this happening in the world, right? In China, I think roughly about $5 billion has been processed in terms of transactions using CDBC. We also see a lot of the e-wallet players over there facilitating this kind of process, right? So I guess I kind of want to start with Ignatius, since he's the e-wallet player in the house. What are your views on digital currencies as such? Sorry, you are muted. Go ahead, Ignatius.
Well, again, like you said, we do not have a concrete plan, at least from our central bank with regards to CBDC. But to me, I'm a little bit more agnostic to it for now. A reason very simple is what we are doing as an e-money issuer, in one way or another, we are digitalizing currency. Yes, it's backed by the currency that's like what Domenic said, it's held by the bank. It's still held by the bank if it comes to us, because we have to actually put it as a trust account. But nevertheless, what we are doing here is essentially digitalizing all the use cases what a cash can do. And we put it into an environment that is actually a lot more agile. For example, I think a lot of people have asked me questions, I've got an ATM card, I've got a debit card. Whenever I have a bank account, I'm automatically given an ATM card. And if I would like, I will apply for a credit card for that matter. But a lot of people fail to realize that 80% of the transactions done in Malaysia is still predominantly cash, because it's not at all locations that you have a terminal that accepts an ATM card or a credit card for that matter. And a lot of times we are buying things, along at the local shop, the mom and pop shop by a corner road store. You go by the food truck, it's still all in cash terms. And that's where we come in quite strongly. And how we have seen the landscape change in the last 118 months, the last 18 months for that matter, is that people have started to adopt and embrace digital currency from that perspective, using the e-wallets. And that hence, I feel that from a CBDC perspective, I think it's a good way forward. I'm not sure when it will materialize and when it will gestate, but I think with the banks doing what they're doing with the app, online channels, as well as the e-money issuers going through the app platform to perform your use cases and to reload and to save money in this case, like for us, I think it's a great start. I think it's setting up a great platform for what's going to come in the future.
Thank you for that, Ignatius. I think one thing that we are seeing BOC, the public people's the bank of the central bank in China. So suddenly the name escaped me. I don't know why. One of the concerns they raised was that with the introductions of retail CBDC, maybe banks may not see as much deposits, and I think there's a lot of huge implications for the retail banking side particularly. So I kind of wanted to get the views of either Domenic or Muazzam, or both of you, if you'd like to chime in on what do you see the impact of these digital currencies onto the business of retail banking. Muazzam, would you like to go first?
Yeah, probably I can share some of my observation. Obviously, it's something that we also watching closely. CBDC, we've also are aware that currently, some other central bankers have at different stages. One of bit more advanced one would be, in China, Central Bank of China doing the pilot already. But I guess I wouldn't say that, for example, the CBDC will completely replace our typical, M1 money supply, if we were to call it, and completely displace retail banks. And I think reading Bank Negara's latest statement is not something that Bank Negara is really embarking on yet, but it's being reviewed. But I think probably a few things that I can share here. Why I say that probably it will be take a bit of time. First, that I think from the perspective of preparation, I mean, in terms of how prepared are people in terms of to go fully digital currency, for example, right? I mean, the interesting thing is that even though we see we saw last year there's a lot of higher transactions on in terms of financial transactions on using online digital channel, but we also saw a report by Bank Negara to say that the cash in circulation also was higher last year. So in a way, it's almost like saying that in a situation whereby there's this kind of pandemic uncertainty, people still want to hold cash. All right. So the kind of confidence probably partly is that how confident are people in terms of ensuring that their money is kept, and the only custodian for the money is the private key. What if they lose the private key? Would they lose all the money? I mean, we've read some articles about some of these Bitcoin holders. They are unable to access their money and all that. So I think that's one thing. Secondly, is that of course with digital money, the risk of theft would be another risk. I mean, if you do it without the intimidation of the bank and all that, if it is lost due to cyber theft, cyber risk and all that, I mean, if something like that were to happen, and at least, and if the money is in a bank, you can go back to the bank recourse, if there's clear cut, failure by the bank, and you can get back your money, that kind of thing. But that's also the second, I think, consideration, I guess, right? The third is that in the context of our current country, I think our current retail payment infrastructure, especially we've got the real-time retail payment platform, RPP, that we have, are also already quite seamless in a way. For example, like, the money transfer and all that can be done almost instantaneously. So in terms of the reason to really embark on fully digital asset, digital currency and all that, could probably be mitigated by the fact that the current infrastructure are already enabling that seamless payments to happen. The other part, the fourth part, is that when we talk about it will not be it will be displacing the retail banks and all that, we also need to acknowledge the fact that the role of the bank is not just to facilitate payments, it's also to create credit, to give lending and all that, whatever it is, right? So I think that is the part that needs to be considered carefully, because I mean, the fractional reserve system is there, and it is an important component within the monetary policy. And the bank's role in terms of playing the important role in the economy, basically. And then at the end of the day, whether it's digital currency, is physical currency and all that, I mean, 50 ringgit is still the same value. So while I'm not being pessimistic, I'm not saying that it will not happen, but probably in the context of Malaysia, I think these are the various, I guess, consideration. Thank you.
Thank you, Muazzam. But I suppose if Bank Negara were to roll out a retail CBDC, there would be considerations in terms of recourse versus the kind of cryptocurrencies you see out there, not your key, not your coin kind of situation, right?
Yeah,
But,
for CBDC.
thanks, yeah. Thanks for the insight. Domenic, would you like to add anything to this particular part of the conversation? I think you're muted, actually. Go ahead, Domenic.
Yeah, just a couple of additional points, if I may. Is room, right, for a currency in many markets, right? And if it's issued by the central bank, then the acceptability and so on would be significantly higher. And you won't get that kind of, fluctuation, speculation, and whatever that you see in some of the things we're seeing right now, the Bitcoins and whatever you, right? But I feel, though, whilst it feels almost inevitable, it will be living alongside the fiat currency for some time. My overall feel is it won't be an immediate replacement of the traditional, fiat currency. So there'll be a dual use, right, for some time. The regulators and governments and so on will have to figure out things like, banks are here as an intermediary between the sellers and the borrowers. And that intermediary generates a multiplier effect. So then you'll have to figure out, right, with a digital currency, that the functions that the financial intermediaries have played for centuries, right? How will that work with a digital currency? So that's quite important, right, for economic activities and so on and so forth. The other setup is monetary policy. You can influence, right, economic outcomes, social outcomes, because of the monetary policies that either the governments, monetary and fiscal policies, right, the governments or central banks run. That their whole thing, right, with a digital currency will also have to be thought through and ensuring, right, that kind of policy flexibilities are maintained, right. And the other thing about a digital currency, I feel, is inclusiveness. It's been talked about, right? It shouldn't be a currency just for the digital savvy. I think it should be a currency for everybody. So the 80-year-old as well as the 5-year-old, right? We all need to inclusiveness, right? We talked about it. Digital banks try and serve the underserved and less less involved in the financial system. You wouldn't want a currency that takes us backwards, right? When it comes to inclusiveness. So I guess those are some of the considerations, right? Before I feel we're going to fully move, right, throw the fiat currency away and move into a digital currency. But certainly, in parallel, I think there's room for both for some time.
Thank you, Domenic. And I think, on to your point of like the economic aspect of things, the introduction of CDBC could also kind of speed up the disbursement of aid to the citizens, right? If we had CBDC in the US, we probably wouldn't see people looking for COBOL engineers to help with disbursements earlier last year. But thanks for your view. We've unfortunately ran short of time. Yeah, for sure.
You
Thanks,
have all of
Domenic.
that, and you might reduce leakages, right?
For sure, it'll be more trackable as well. So we've unfortunately run short of time. So I apologize to the audience that we cannot answer all the questions. We tried to incorporate your questions as we went along. There's about nearly 500 of you tuning in live today. So once again, I apologize that we can't take all the questions. So right now, let's move on to some closing thoughts and get the panelists to share their views on how they see the space evolving from medium to long term. Maybe we'll start from Anson, then Ignatius, then Muazzam, then back to Domenic. Anson, what are your views in terms of how the BFSI space will evolve in the medium to long term?
Yeah, I think with the from as a tech vendor, we can only share our observations. I'm definitely not an expert to comment, but what we observe from the market is a lot more mingling or partnership, if you will, between the ecosystem platforms and the financial service provider and the financial institutions. So we start to see patterns like banking as a service, for example, right? So where the traditional financial institution work with the fintech company or the ecosystem platforms to provide finance at the point of need, right? So these are some of the trends that we observe. I also like to touch on the digital currency, right? So just from an end user perspective, and earlier a few weeks back, not sure if you know, there's a massive flood in a city in China, right, in Henan, and as a result, the mobile infrastructure got damaged quite severely, and then people were struggling because in China is pretty much a cashless society right now, right? Because the impact of the internet, of the mobile infrastructure, a lot of people actually struggle because they don't really have cash in the pocket. So there's no transaction can be made during that recovery period for momentarily. So that's a sign to us that maybe remind us that no matter how digital this society will go, there's always need to be a backup plan, right? So I think that's just my two cents from me. Thanks.
Thanks, Anson. That's certainly an important perspective. Thank you again for sharing your views with us today. Ignatius, you have the floor. What are your predictions and what you see evolving in this space?
I think more from our internal perspective and judging from what our end users are requesting. I think very clearly it's all about, especially during this pandemic, it's got to be a seamless, convenient, and a safe mode of conducting your transactions, whether it be for banking, financial services, or insurance. So I think it's all about first enriching the way that our user journey, our user experience is, to make it even more seamless for our users. For example, let's say we have actually topped up our existing ecosystem, whereby someone makes a transaction. If let's say the wallet has insufficient cash, we allow you to do a top up and go kind of thing. We want to make sure that the whole user experience is a lot more seamless. I think after launching our Go Plus Insure this year itself, the user has a taste of it, and they are asking for more. We are putting in our pipeline something that is a lot more exciting, but we want to make sure that we go back to the basis of what our wallet is specifically for. It's a wallet for the masses. So we want to make sure that we are not, specifically targeted a segment, but across the entire spectrum of the Malaysian society. So, it's something that will be appealing for the B40s, N40s, even T20s as well. So I think keep it exciting, but make sure we space it and time it, whereby we have to put in the gestation period, the education process for the Malaysian public. I think that's key. I think that's what a lot of us are going to do. And I believe the banks, in the advent of the digital bank license being evaluated by our regulators, I think that's all in place. And I believe people like Domenic and Muazzam, Hong Yong and his Bank Islam is all gearing up to make sure that there is something that's in the pipeline. And that's what we are doing also from an e-money issuer. We just need to make sure we get people excited, we get people to know that the things that we offer is relevant to them. I think that's going to be the medium and the long-term thing, to keep everyone sticky. And hopefully, again, like I said, one day, the banknote's going to go away.
Thank you, Ignatius. You're always a teaser. You're like, oh, we're excited, something exciting coming. We will stay tuned for your announcement and see what the exciting thing is. Thanks again. Let's move on to Muazzam. Muazzam, what are your predictions? How you see this space evolving from medium to long term? Go ahead, Muazzam. You have the floor.
I mean, considering the current pandemic, if you talk about it from the medium term, right, a lot business out there are challenging. I think even the players, the e-wallet, the banks and all that players and fintech players and all that are also feeling the heat. And I think from the experience that we've had in the last 1-2 years working together and all that, there's a lot more understanding in terms of what each party can bring to the table. So my prediction in the medium term, probably going towards the long term, there could be consolidation, not among existing incumbents, but from the traditional banks with probably the fintech players and digital players and all that, as we move forward. So I mean, I look forward to that, whether it's going to be formal marriages or it's going to be strategic collaborations and all that. But I think working together I see would be the same going forward.
Thank you for that, Muazzam. We'll look forward to hearing about your marriages and dating encounters with the rest of the fintechs and e-wallets. All right. Thanks again for joining us. Last but not least, let's have Domenic share his thoughts with us. Domenic, you have the floor. Domenic, sorry, your mic is muted again. You might need to unmute it.
Yep.
There we go. Go ahead,
Apologies.
Domenic.
Beyond, I think, the digital banking thing, there will be a few developments in the coming years, I feel. One is around the digital contracts. So we're beginning to scratch the surface. The pandemic has moved, right, a fair amount of contracting online. But I think it will become much more formal, right, with infrastructure built around pretty much digital contracts from everything, not just financial services. I think that's, we've seen the tip of the iceberg, and it will develop quite extensively in the coming few years. I think blockchain, right, has been talked about quite a bit over the last 5-6 years. We haven't truly seen, right, significant use cases, but I think we're beginning to, especially around trade, international payments. Trade, as you know, remains largely the confines of paper shuffling, which has been traditionally, the case has been done for many, many, many years. But I think we're beginning to, right, see some collaboration among domestic banks to do for local trade. But I think we're going to see quite a bit in the next 5 years, 10 years, international trade be done on the blockchain, which would improve efficiency in processes, reduce fraud, the ability to provide financing behind those contracts and so on. It would be quite a game changer, I feel. But it's developed a lot for many years around trade finance. The other one is digital identities. All of us in Malaysia carry an ID card. It's still a physical interaction, but over the next 5-10 years, I think governments will digitize everything, including a digital ID, which will make people availing themselves of government services, general financial services, and all other things significantly easier because of that. And on top of that, digital government services. I think whether it's registering a mortgage or withdrawing your EPF funds or any type of government services, I think will be highly digitized. We're beginning to see that in Malaysia already. But if you fast forward 5 to 10 years, there'll be an awful lot more that will be on the digital landscape. So I guess it's beyond financial services, but it's all intermingles, right? And it will make financial services a lot more efficient as well.
Thanks for that, Domenic. Certainly a lot of big themes that you brought up. I agree with you. We're barely scratching the surface of blockchain and smart contracts in terms of the usage in BFSI. Certainly a lot of things we could look forward to. Digital identity is also a big part as well. And with that, it leaves me the pleasure of thanking our panelists for joining us today. I really appreciated the views that you shared, and I wish we had more time to dive a little bit deeper into some of the topics. But unfortunately, we've run out of time. But thank you again for being with us. Now we'll move on to the next session, which will be presented by Shankar from EY. Just give us a moment while we set up. Thank you, Muazzam. Thank you, Ignatius. Thank you, Anson. And thank you, Domenic. Take care now.
Thank you.